All right, what's going on, everybody? No spa music today. Sorry there, Bernardo. Chris Frakes with Texas West Capital. Glad to have you all with me today. Market breakdown. We're going to talk really about Bitcoin today because everybody's lost their damn mind, right? I mean, that's what's going on, right? Everybody's been telling them the top's been in, and we broke down a bit, and so they're really kind of letting those, I guess, those fears kind of lead them, right? But you're not doing that, right? You look at the other stuff. You're trading more based on what's going on rather than emotional fear, right? So we're going to talk about that here. Is Bitcoin's top in, or is there something else going on? So I'm going to give you my thoughts, and I'm going to explain it, guys. Again, I don't ever tell you, hey, listen, this indicator says this indicator says that, and that's why I think we're doing that or whatever, right? We look at levels, we look at price action, we look at volume. So we're going to do that today. Real quick here, Fibbo sends his regards. He couldn't make it this week, but starting next week, he should be here a lot more often. The project that he's been working on and work there is done after this week, and so he will be here. He said next week. Let you all know. He said I'm free and clear after today. Yay! So I've got a message here from him though. For those of you that are interested in what he's thinking, and I like this because it kind of aligns with what I'm thinking here. And usually if Fibbo and I are aligned, it tends to work out pretty well, right? So Fibbo wants you guys to know he's got a video with Crown that comes out tomorrow. So make sure you guys look for that. He said, let's see here. He says, I am backing the truck up here as my weekly bear zone is being tested and should bounce from here. A bear zone on the weekly hitting, and we could easily see 80K. I bought this morning personally to add storage here. 3 consecutive weekly settles under 84,000, and then he's looking for the $60,000 to $70,000 range. But watch the Crown video, lay it out with charts. So there you go, and those levels actually align with what I'm going to talk with you guys about here as well. I just got that from him just a minute ago. Let me see here. Yeah. So, Fibbo's thinking good buying opportunity. If you get the 3 weekly closes, they're below what he said. I think he said like 80,000. Then he's looking at the 64 to 70,000 area. All right. And so for me, what we've been looking at in at TWC is I told them, listen, if we get the breakdown, I kept saying, listen, if we're going to go up, this is the way the count would have to be, but it would have to be leading diagonal. And if we think that, then we have to assume it's a correction because it's just 3 waves up, and we're going to probably get a breakdown unless it breaks out higher, right? And that was the local thing off the last, decent pullback. And so we got the breakdown. And so I said, if we get the breakdown, we had a 94,050 target. We got down to around 94,550 or so. So that got us pretty close to it. And we're starting to kind of maybe bounce a little bit today. We'll bring up the chart in a moment here. We're finding some support around the S1 pivot, the monthly S1 pivot. If you're thinking about the 50 EMA for the weekly, which everybody, it seems like, and their mother's been talking about, that we've still got until the end of the week, right? So we've still got until till it closes. I'm sorry, guys. I got a trade going on here. I think I might just go ahead and cancel it out here, closing it out. But that weekly, we have until the weekends, until Sunday, when the markets close there, Bitcoin. And so we've still got time to continue to pull back up here and still end up above it. The thing that most people don't understand when it comes to horizontal levels, moving averages, stuff like that, it's not just closing below it, right? If you have one candle that is hovering around it, so like you had a high above it and a low below it, and then you're closing below it, but you've got like a long wick on the bottom, I mean, you're essentially saying that moving average has held this support, or that pivot, or that horizontal support, or whatever you're looking at. So, that's kind of the thing you want to change. I'm just going to get out of this stupid trade. I probably should stay in it, but $200, whatever, quick. 10-minute trade there. Anyway, but yeah, so a lot of people, they go, oh, we got to close under the supports. Oh my God, the support gave way. And that isn't the way it works, because supports aren't, to the penny, right? Support and resistance are ranges. And I teach this a lot. So whenever you see those things, or you see like a moving average, that's why you'll often see like a dip below it and a move back up, whether it's a little bit closed below it or just a wick below it. And then it'll close out and then it'll continue going, right? Or the same thing when it's going up and it's getting rejected and coming down. It's a range around that area. That's what you're looking for, okay? Is this canceled today, JoJo's saying? Y'all can hear me, right? Y'all can hear and see me just fine, right? Let me make sure. I've been sitting here talking, and I just want to make sure here. Let me see. We are live. You can hear and see me well. Okay, great. Deadly123 says, let me put that we are live there. Everybody else is saying you can see me too. Okay. So I'm not sure what's going on with you, JoJo. Hopefully you can get locked back in here. Maybe just have to restart your browser. But I'm talking to nobody, or I'm not talking to him if you can't see me and hear me, right? So anyway, here's the thing. The question is the top in or not? And I think there's enough here to say that what it looks more like is a correction than distribution. So you guys want to talk about that? Yes, no, maybe so. I haven't updated this particular chart, but you know what? No, give me just a minute here, guys. Let me pull up my chart I'm using with TWC here. Let me see. I think that's the one right there. Yes, because this one's got the count on it. The count on it. All right, let me pull it up here for you guys now. Add to stage. There we go. Holy crap, we got to bring that down some here. Let's do that there. All right, guys. So let me do this. Let me take off everything here to begin with. All right, so this right here is that 50 EMA for the weekly, okay? So if we go to the weekly, there it is. Now we could have, again, we could have this pull back up by close on Sunday and get back above it. It's right there around 101 and some change is where that level is. And here, this is the Bitcoin USDT chart for Binance. Okay. Now I know somebody somewhere had said, oh, it's never dipped more than once on the 50 EMA and continued higher. Well, obviously with this chart, twice here back in 24, twice here earlier this year. And we've got one here and maybe a second time right here. This is actually three right here because you have this second one right here, third one. So, but the idea is that, this is, you've got the range. It's a support there, right? You might dip below it a bit. You can hold it up there, all right? But everybody's thinking, okay, this has to be distribution, right? And I've seen a lot of knuckleheads out there just putting up the Wyckoff, one of the Wyckoff distribution schematics and going, oh, look, it's Wyckoff. There's one in particular, keeps coming up on my timeline. I won't say the name, but my gosh, seriously, right? Listen, guys, if anybody out there, I don't care how much it looks like it, if somebody puts up a schematic, which is just this thing that shows some price action, like it's like a line price action with a range, and they have labels on there, and it says distribution, but they're not actually looking at the volume and price action analysis with it, just run the other way. They have a 50-50 chance of being correct. Accumulation, reaccumulation often looks a lot like distribution. Okay. It looks a lot like it. Okay. Let me see here. So, what are we looking at? So if we look at this here, what we have, this right here is You can't really see it, but it's the weekly S1 pivot and the monthly S1 pivot right there. And that's where we're kind of find support, right? But here's my thing. Here's what I want you to see. If this is distribution, okay? If this is distribution, first of all, there's relatively no volume at the top here. You know, you expect to see bigger moves at the top, right? In distribution, you're talking about unloading millions and millions and millions of the asset, right? But you're not getting real volume up here. Now, you get volume here, okay? You see this is the volume here? But what happens the rest of this time going down? Well, first of all, notice the price action is overlapping. It's not a sudden drop down, right? You could say, oh, but there's a sudden drop down here. Yeah. And then it rallied up here. If this was distribution, what I would expect is this would be a last point of supply. And then we'd see a sharp move kind of like this, but closing lower to the bottom on the move down here. Instead, what do we have? We have overlapping price action. What else do we have? Well, right now, you know, this could, and remember, guys, this is all just based on the chart as it sits right now, okay? But we have a contraction in volume here, okay? So the other hallmark of distribution is once you hit your last point of supply, you start getting large candle spreads, large volume, and your volume should be heading up. It tells us that the market is participating. The market is selling off with it. The market agrees that it should go down. And so you see a stronger move down, not this overlapping kind of thing, right? Also, again, look at the size of the candle spread. You have this large candle spread here. Okay, that's a good start, minus, of course, the big wick, whatever. But there's the last point of supply if it's distribution, right? But what happens here? Look at this candle spread. Look at these candle spreads. They're getting smaller, right? You're going from large candle spread to smaller. You're going large to smaller. Your volume is contracting, and you're getting overlapping price action. None of that is what you look for in distribution, okay? You look for the opposite, okay? So yeah, so if that's what, you know, that, you know, we're looking at that again. Now, we could get a sudden inflow of selling today, and that kind of throws that, you know, to the side here. It wouldn't be a spring here. No. The structure here is a lot more difficult to kind of get together what you usually see, right? But effectively, you would have kind of like this reaccumulation on the decline here. So instead of looking at it horizontally, you'd look at it more diagonally down there, right? So basically, you would kind of look at it kind of like this here. That's kind of how you would look at it. All right. That would be the easiest way to look at it. Now, on this, I guess you could say, yeah, that might be a spring right here and whatnot. But the important thing that I want you guys to note is if we're looking at all this sideways here, what everybody's claiming is distribution, and we actually look at the volume signature on the move down, as well as the overlapping price action, as well as the shrinking, the contracting candle spreads, right? This is an orderly move down. This is not panic, right? Let me show you. You want to see what panic is? Let me kind of take some of this off here. Let's look at some previous tops here. This is panic, right? So you have your distribution here, and boom, 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 comes down, right? Here, distribution up here, boom, look how quick it moves down, right? That's what, you know, panic looks like. Well, I guess let me look here. Here's what I should say. I'm sorry, that's the local one. Those are corrections. But right here, you see you have your distribution range up here. You see what happens with that big candle spread. You see how the next candle spread over here gets bigger, and it kind of keeps doing it. See how it gets bigger down here? That's what you're looking for distribution. Let me see if I can find some volume on that. Yeah, so here you have that volume kind of extending and going up as you're kind of going down here, right? Here's the same idea. Distribution here. This would be your last point of support. Look at the breakdown, big candle spread, bigger candle spread. Look at that volume pumping up with it. That's the kind of thing you're looking at. If this was to be end of the cycle distribution, that's what you would expect. That breakdown leads to that big volume on the pull, but instead we have this orderly kind of pullback. So again, there's no guarantee, but if I'm looking at it and I'm being, realistic about it instead of just emotional, we're not seeing that right now. You can look at things like dealer gamma right now. You can look at things like ETF outflows. None of that. The dealer gamma and the dealer positioning right now says that the APs are well positioned, right? They're not, sprinting to have to refill to buy Bitcoin and whatnot. You've got the ETFs. ETFs, yeah, they've got some outflows, but they're minimal outflows, right? 100 million, 200 million, 300 million, right? We're not seeing like a billion plus in outflows. So, even when you're looking at that, you're not seeing panic. Okay. So, if we're looking at it and we're being, honest about it, rather than being emotional about, oh my God, this down here, and everybody's been saying it looks more corrective at this time than it does like distribution. Okay. But all outflows are not T plus anything now. Remember, everything's just next day now. Reg domain. Remember that got changed back there in Q1, Q2 of this year. There's no more T2, T3, all that kind of stuff. Like there used to be with all the stocks and whatnot. So, but anyway, if we're looking at this, we have to go, okay, so there's reason to believe that this may just be corrective here. Now, if we look at this, again, something I've been talking about a while, which really kind of keeps me on this idea that we're corrective, is this right here. It's just 3 waves up to a new all-time high. Now, the only time you're going to get 3 waves up into a new high is if it's the end of an ending diagonal. But if we're looking here, it's looking like 1, 2, 3, 4 here, right? Or even you can go like a 1, 2, 3, 4, 5, right? If you want to get that, you can get a 5 up there. You're 3 back and 3 up. So when we look at it in terms of Elliott wave, that's the mid of what we call a expanded flat correction. Okay, so you get like that push up for wave B, and then it pulls down for wave C, which looks more like what we're looking here, right? It looks like an ending diagonal. And so again, if we go on here, let me take it down to the daily. We've got that in there, right? We've got ABC 1, 2, ABC 3, 4, and potentially ABC 5 here, a sharper move down. Now, that's potentially, you can't really see it here on the daily other than the big candle wick here. But if we're zooming in here, 4 hour, there we go. It looks like it could be A, B, and then 1, 2, 3, 4, 5, C. So A may be up here actually. And you just do like a flat for B and then 1, 2, 3, 4, 5, potentially. Okay. But it also could be that we're finishing the A, we'll get a B, we'll get a C still coming down here. So maybe not. We'll see how that goes. But right now, it suggests, there's support in this area. We've almost got here. If you want to bring in indicators, we're almost oversold on the daily for RSI. Stochastic RSI almost oversold on the daily. And so we could, like I said, get maybe one more push down to finish like an A, a B, and a C here. But we'll have to wait and see. What we're looking for like a weekly, close above like 102, 103,000 area. If we can get that, things start looking really, potentially like that's just a corrective low in there. Okay. Seth says, I don't like the dip below the MA here though. Yeah, well, again, that's a weekly MA. We're looking at the daily, right? So, it is possible the weekly, you get a strong rally back up, right? But again, my big thing I'm looking at here, if I'm looking at it and I'm trying to figure out, is this distribution or more correction, right? I'm looking at that volume and that price action, and it's not screaming distribution. Okay. Now that said, what would that mean in terms of what might be going on? Well, okay, I've got two ideas here. All right. And the second one I've not seen anybody talk about yet. But right now, this is my count here. Let me kind of pull this in a little bit more here. So if we look from the low here, we get 1, 2, then 1, 2, 3, 4, 5. Gives us 1, 2, 3, 4. And then this becomes potentially, again, if this had been a clean 5 waves up to the all-time high, I would really be thinking this may be a wave 5. But it's not. We have this 3-wave move here. And I try and here, and I just can't find, an acceptable looking like ending diagonal here where you have ABC for 1, 2, ABC for 3, 4, ABC for 5. That doesn't mean it's not there. It just means that I am really not finding it at the moment. So if this, by the way, this pullback of this, we're looking at this as wave 1 of 5. This pullback, this flat correction here, has pulled back just about almost 61.8. Okay, and you can see where it's pulled back here. Let me kind of take some stuff off here so you can see. But where we pulled back is where? It's right here. Right? High volume node, where we're sitting here. I mean, so again, if you're looking for, could it possibly be? Yeah, there it goes. It could be because it's there, right? It's right there at the at that kind of support area. And again, at the S1, the monthly S1 here. I mean, look at the 3-day candle. If we look at the daily, we go, oh, well, it's biting down on the daily. But the 3-day, we're just hovering around that same monthly S1 pivot, right? And by the way, this 3-day candle, Wednesday, Thursday, Friday. So it ends today. So it ends tonight. But, we could get like this and get a 3-day candle right back up. And that would, right back up to this 103,000 area where this candle started. And that would be considered the same thing as a wick here. And we'd say, okay, well, the S1 pivot held this support. So if we look at that as a 3 and a 4, and then we get a 1 and a 2, well, that without a blow off top, just a normal extension that we look for, would get us around 194,000 for a wave 5. Okay? And I'm sure none of y'all are complaining about 195,000, right? So, Gustavo says, if this is corrective, then what would we expect to see next? Five-wave structure, an impulsive third, closing above the 50-week SMA, closing next week above the 50-week SMA. Yeah, again, if this is corrective, we should assume that it's probably done or pretty close to being so, right? And then that would give us, based on where we're at, those targets up higher. Okay? Okay, no, I'm not pulling up a schematic. Reg domain. I'm telling you, man, that's what I said at the beginning. Stop listening to people who pull up those schematics. It's idiocy. Those schematics are used to teach Wakofians, new Wakofians, how to understand phases and the labels. It's not meant to say this is what it's going to look like. Sometimes it looks like it, but guess what? A lot of times, accumulation and reaccumulation looks damn near exactly like distribution and redistribution. Wyckoff, in order to do real Wyckoff analysis, you need to have what I'm talking about here, which is that proper price action plus volume analysis, right? That's what you have to have. The schematics don't mean a damn thing, okay? And I don't mean to be jumping on you about this. I get so frustrated with it because people come in that don't know anything about Wyckoff, and because prices kind of move in that same direction, they think, oh my God, yeah, you just need to look at the schematic. And they end up getting wrecked so bad, right? And I don't want any of y'all doing that, okay? Because it's just ridiculous. The price action means nothing in and of itself. Structurally, yes, it looks kind of like that schematic. But Wyckoff doesn't teach, price action. He teaches price action plus volume analysis at certain points within that range, which is what the schematic is trying to show you. Where are these points? There are a billion different ways that your distribution, your redistribution, your accumulation, your reaccumulation can look. There's as many ways as there are, days in an eternium, right? I don't know. But what I'm trying to say is it doesn't just look like that, right? They all look like that, right? What you may, looking at the schematic, you may look and go, oh, look, it's a UTAD. It's an upthrust after distribution, because you get the breakdown below it. But in terms of Elliott wave, that's a flat correction, right? So just looking at that alone doesn't help you out any. Okay? That said, let's talk about something other people aren't looking at. Most other people aren't looking at. Let me see if I can pull up a different chart here. What if, okay, so I gave you that other count, right? But what about this? What if? Let me see if I can do this a little bit better here. If we do get further breakdown, Chris, what does that mean? Well, it may not mean that the end's in yet. What if we're looking at this, something like this? So remember what I was talking up here about the flat correction? Let me pull this in with the rest of this. Let me get this out of the way here. All right. What if this? Oh my gosh, get over there. There we go. Okay. What if the range is actually something like this? So what we would look here, again, instead of, let me get these put in here, right? So instead of this being like a 1 with the flat as a 2, if you insist, well, I mean, again, maybe this becomes, this could potentially be like an ABC and then an ABC. So that gives you a W, 3 down is X, 3 up is Y, right? So it gives you 3 waves up. But again, what if we're actually looking at a larger flat correction here? So again, everybody's thought right now is, oh my God, it's the end. We're done with. And I'll give you some reasons outside of price action why that may not be the case. But what if this is what we're looking at here? What if we're looking at A down, B up, and then we get a move down here, right? This would give us an expanded flat correction. We come down here and we dip below the swing low here. Can you imagine the smell across crypto Twitter if we did that and then headed up to a new all-time high? Bamboo says UTAD would have needed much more higher volume. Exactly, I agree, right? If we're looking at the volume, if we're honest about the volume there on, that local range at the top, there's not much volume. The UTAD looks a lot like or should look a lot like a large, like what we would expect the opposite way with a heavy spring or terminal, whatchamacallit there? Okay, terminal shakeout, right? Where you have excessive volume at the top because it's your last push. It's man, the crowd is so excited. I've got all this supply left. Let's push them down now. Let's get them going. Let's be serious about this and just dump on them. And you get a lot of volume at your UTAB, right? So Let me see here. Andrew says, I'm actually seeing your cycle 3 there as a wave 5, and now we're seeing a flat super cycle 2. The only time I really look for when it comes for like a flat on a 2 is if it's after a 4, right? If we're looking for a major 2, again, if we look at wave psychology, we don't just want to write things because they kind of fit, right? We want to understand the psychology behind it. The same thing with Wyckoff, what we were talking about earlier, right? When Reg was saying, hey, listen, pull up the Wyckoff schematic, right? And I said, well, that doesn't do anything. It means nothing because it's just price action. There's no intent visible on that price action. That intent is shown with where's volume showing up in relation to that price action, okay? Let me see here. Let me see. Oh, Bamboo says exactly. Also in Ellipse, where they say we are sentiment wouldn't be in the gutter. Fear and greed index is at 15 so far. Max fear. Yeah, exactly, right. So this is the other possibility. If we continue to break down here, right? So if we continue, my targets are 90,000, 80,000, and then 74 to 76,000, and then 69,000 or so, right? 64,000, I'm sorry, 69 to 71, 74 in there, and then 69 down here. But with any of those, that still leaves us this potential move here. Why? Because we haven't seen, if we think of things outside of just the price action, right? We haven't seen the crazy kind of ETF flows that you usually see when ETFs are new to a specific asset. We've had a lot of money rolling in through the ETFs, yes, but it hasn't been that extreme that we usually see. And again, right now, the selling in the ETFs is much more orderly, right? It's lower volume comparatively to what we would expect to see, as a signature of distribution. Okay. How was I going to explain that flat idea? You mean for a wave 2? So again, usually if wave 2 is going to do a flat, usually it's going to be like wave 2 of 5. Okay. And so, yeah. So usually, because remember, wave 4 is that pullback, right? But what's the wave psychology? Wave 2 is this, we're going to, shut you down immediately, make you think it's all over there and whatnot, right? But wave 4 is more the correction. It's more the adjustment, right? Wave 2 is the scare. Wave 4 is the adjustment. So if you get wave 2, within that wave 5, that gets you then that with that wave 4, that larger degree wave 4, what we're looking at right here, right, is more of the adjustment. And then your wave 2 becomes, it's not here, but where I was showing it earlier, right? Your wave 2 becomes that setup within that area here. Okay, does that make sense? Because when you're getting to the top there, what you're looking for is just you're looking for volume, right? You're looking for just to get unloaded. Okay? That's what you're looking for. And we're not, again, this could change today, could change this weekend. But right now, for what we've done here, if this is going to be a top in here, again, let me zoom in there. If this is going to be a top in here, well, again, if you're looking at, this would be a buying climax, automatic reaction, right? You get your little up thrust there, your pullback into your secondary test there. And then this would be an up thrust after distribution, right? And so with that, where's the real volume, right? You have barely any more volume than what you had over here. And all of this volume is much more insignificant compared to even this volume over here, right? So, that's what we were looking for. We're looking for a nice big spoof of volume to come in, and we're just not getting, we're getting a little bit, right? We're getting kind of like this here on this flat correction here, right? Which came down. we're looking very similar, what we're doing here, to that right there. So again, the idea is maybe this is a 3 and a 4, and then this becomes 1, and then a 2 is a flat here. And again, if we get a weekly close above 103 or so, that should kind of set up that move for higher up. Should. But of course, we still need the follow through, right? Or if it continues breaking down further, I've got my targets all on the way there, but I'm really looking for a target down here, down here toward this low 70s, potentially a wick down below that here on the weekly or something, and then the move back up. And again, everybody's so convinced that's the top, but in the grand scheme of things, let me see here. Yeah. In the grand scheme of things, it's even possible. Here's even the other possibility here is this gets you a 1, 2, 3, 4, 5. So this was a 1. This was your sharp move down for a 2. And then even this here, this 3, 4 becomes, becomes 3 and then 4 here and then 5. So this bear market we had here in 2021 to 2022, right? That 1 year there potentially becomes just an interior wave 2 of this bigger move up. So there's a couple of different ways to look at this. And until we really see some volume and large candle spreads coming in, there is that likelihood that this is just corrective locally rather than being distribution. Okay. Let me see here. Based on your experience in the past, have you seen the extreme greed for a new ETF asset? Does money just flow in like water? So again, usually when you get a new ETF with with an asset, usually you see a lot more significant interest than what we're seeing at the moment here. Now, again, maybe it turns out to be a bit different this time, but usually you're going to see a lot more euphoric pushes in, right? What you'll generally see is you'll see an excitement at first, and then the pullback, and then that final burst of excitement, which we haven't seen yet, right? We saw that excitement at first when it first kind of launched and started building up there that first year, but that was it. So, again, if we're looking at, the things that really should matter, the volume, the price action that's going on with that volume. I mean, and if you think it has to go down, and it may go down further, I think this is, probably the best thing we look at the moment here. Again, the big issue for everything is this 3 here. This little 3 right here. Again, maybe I'm missing the diagonal here. I've seen people draw a big, huge diagonal. Again, we wanted to align with what we have in terms of count here as well, right? So I think the way that most people are drawing a wedge here, something like this, if I'm not mistaken, right? Something like that. But in order for this to be a valid wedge, this would need to be 3 waves up. This would need to be 3 waves up. And such a tiny move, this would have to be 1, 2, 3, 4, and 5. And such a tiny little move over that, on such a large, we're starting from down here at 49,000, going up to 126,000, with the previous high being there at 124,000. So you're just going like, $2,000 higher for a wave 5. I'm not saying it can't happen, but again, you look and go, well, you would expect a bit more movement up for that final 5th wave in an ending diagonal. Ending diagonals don't tend to just roll over. They tend to have a nice move up toward a resistance and then a sharp move down, right? They don't tend to just roll over, or they'll have a throw over here, something like that. Throw over, and then a sharp move back down. But it's that sharp move back down after that sharp move up, right? It's that reaction that you guys are used to when you see, again, when you see the big move up and then almost immediately it seems like price comes right back down. That's the ideal you should more or less see at the end of a diagonal. Okay. Your top line of the wedge, Andrew, starts at wave 3. So you're starting a little bit higher there. So something like this, I guess. Well, okay, so here's the other thing. Wedges usually don't run into basically the apex of the wedge. Like if you look at this here, let me zoom this in a little bit for you guys. Wedges don't tend to run into the apex. They tend to run about, probably about 70% or so of the wedge, and then they complete, or they bust out again with that throw over, and then the sharp move back down. So again, if I look at this, I'm not saying that it can't necessarily be, but if I'm looking at this, because we have price running up into the apex of the wedge, it makes me a bit more cautious about stating that it's a wedge, right? That's not it. Wait, what's not it? I thought you said yes. I had to draw it on here, right? Let me know if I have it drawn on here, right, Andrew? I definitely want to discuss it. What you have this. You think maybe it would be this here? Maybe. Again, yes, maybe. But we're still running up into the, watch, if we draw them all out here, you see how we're still running up into the very apex of the wedge? So that's the same issue that I would look at with it, just in wedges in general, right? A properly defined wedge usually is complete at about, 70% or so, 80% of, where it gets from base to apex, whether it's coming down or whether it's going up, either way, right? And often you're going to get a throw over if it's, if the wedge is up, or a throw under if the wedge is down. Throw under looking kind of like we've got here, right? And so, but here's the thing. Again, we're still getting pretty close to the wedge apex here. It's a bit more drawn off. I mean, you have to go like this and bring it over here, and that's the end of the month, basically around Thanksgiving. So we're still getting kind of close to it here, but what we're looking for, if this is going to be a wedge and this is going to be a throw under, then what we would expect to see would be, the strong move down and then a strong rally back up into the wedge, and then continuation and a push out through that wedge there. We don't want to see a lot of sideways if it is a wedge, right? If it's a throw under of the wedge here. So that's another thing we can look for here on this daily. We can see if it's going to, reverse back up sharply and get us right back into the wedge here. And then, limited sideways before breaking out impulsively back up through the top of that wedge and continuing. Because what you look at when you get a throw under, it's a throw under of support, right? It's like this here. The throw under of the support over here, you get the rapid move back up. It doesn't have to come in the same candle, but it needs to usually happen within the next candle, if not that current candle, to bring it back up there. Does that make sense? Let me see here. Your bottom week starts at September 2nd on the weekly. Let me see here. Weekly. Oops, wrong chart here. September 2nd. Here? No. Here? Let me see what you're talking about here real quick, Andrew. Charts on September 2nd on the weekly. Way down there. Okay. So you're looking at 1, 2, 3, 4, 5. Yeah, again, Same idea. We're getting, especially in this larger move, we're getting that move all the way up basically to the apex. So again, it just, and we're getting sideways here. And so if we think about wedges, what are wedges doing, right? Again, when you're thinking about charting, right, patterns and things, it's not about the pattern just because it looks like it. It's about understanding what the pattern is telling us, right? And so, when it comes to a wedge, you're talking about that compression, and that compression leads into a big move. Okay. So what you're looking for is a compression. You're not looking for a compression into a sideways and then to a rollover, right? My big issue with the idea that this is a wedge, and again, it doesn't guarantee it's not, but with a wedge, just like with the triangle, you're consolidating, right? And when you get out of that wedge, it should be a big move. There shouldn't be, like the wedge does this and then does sideways here for a while at the top and then kind of rolls over, right? You're not looking for this rollover type thing here. You're looking for, a sharp move up and then a sharp move back down. Generally speaking, with the wedge, right? That's the psychology, right? It's the compression into the expansion. Okay. So again, that's if I'm looking at a wedge, those are the things I actually look at when I consider maybe something is a wedge or not. Now, it doesn't mean I'm going to be 100% correct at the time, right? That doesn't mean I'm going to be 100% correct at the time. What that means is generally speaking, these are the ways, because of what the pattern is telling us what's going on. These are the way they generally tend to come together. And that's that. And so does that mean it can do something different? No, of course it can do something different, right? The big thing is there are no guarantees in trading, except that you're going to lose money from time to time. And the newer you are, the more often and the more money you're going to lose, right? That's the only guarantee. Other than that, everything else is based on what are the probabilities, right? And so what you're trying to do as a trader is you're trying to put those probabilities in your favor, right? So, again, maybe could potentially be, but the things that I'm looking at when I'm looking for a wedge, this is different than that at that, especially as you get toward the apex of it. So for me, if anything, what I would look at, I'm not so much concerned about the wedge. I'm more interested in this right here. If you wanted a reason to short, definitely short the breakdown of that support. But the caution comes with, if you believe this is an ending diagonal, a wave 5, and everything's into a bear market now, what you're going to be expecting is further and further and further move down here, right? Versus, if this were to come like this and then rally back up. Right. And so that'll make it difficult if you're trying to trade it, because, emotionally, psychologically, you're going to be expecting that further down. And as it bounces up here, you're going to ignore things. If it breaks out above this line, you would ignore that. You go, oh, it's just going to get rejected. We just need it to stay below this, the all-time high up here now and to come down, right? And so you end up losing a lot of money on that move there. Now, again, if you just want to focus on this as a short on a breakdown here toward targets, right? You can maybe add to your position as you hit certain targets or something. I could, that's a decent way to play it. Sure. Okay. Let me see here. Can I look at your chart? I don't know what your chart is, Xander. I don't know what your chart is, man. Otherwise, yeah, I might pull it up here. Yeah. If it breaks back up in the upward support there, yeah, you would definitely be like, okay, well, no, it's just going the other way there, right? You definitely want to pay attention to that. Let me see here. Is it too early to talk about Bitcoin's diminishing returns and the possibility of seeing it perform sideways for 106? Oh, for 10 and 20 years, like gold. I thought it said 106,020 years. No. So here's the thing. My big thought here is this, okay? I think when the bear market comes in, that it's going to be a wave 4. I think. And wave 4s are going to go sideways, right? It's the reset. It's not to scare you to make you think it was a dead cat bounce, right? It's a reset. It's a lot of sideways more than just a direct drop down, right? So what I was talking about earlier, right? Your wave 2s are usually a sharp move down, the psychology of it. Wave 4s are generally speaking sideways. So triangles, flats of various kinds, combinations that go more sideways than down. So I don't know that it's too early to talk about it, but that's what I'm expecting when we do get that kind of bear market, right? Now, with this going down, is it possible? How long might it take if we're going down toward the 70,000? Well, that could take a few months. That could take a few months, right? You get maybe a little bit further move down, then you get a decent rally, making everybody think, oh, it's in, and then it get rejected and come down again. But that could take the place over a few months. Other things we can look at, right? Government's back in, starting to rev back up again. The TGA account again is sitting like at 950 billion because they haven't been spending money. It's been refilling since the summer. And if you don't understand the TGA account, it's just the government's checking account, basically where it pays its bills. And so it's been refilling, which means it's sucking all that liquidity out of the system, right? So it's not that we haven't had liquidity, this year or since the beginning of summer or whatever. It's that the liquidity is getting locked up, right? But with the government coming back in now and bills to pay and all these things coming in, that money should start then finding its way back out. That means liquidity coming out, right? We know that Jerome Powell's basically saying they're gonna cut QT. They're finally gonna turn it off in December. That's the expectation. Now that doesn't necessarily mean QE starts immediately. What that means is they stop selling. They stop selling what they have and taking more money out of the system, right? Again, this is another way in which liquidity is removed from the system. This is quantitative tightening. So if you're considering that and you're looking at it, you go, okay, well, there's a good, reason why maybe, again, this just is one of the two ideas I was talking about as far as, maybe a wave 2 of 5 or maybe this larger wave 4. And again, this wave 4, I've not seen anybody talk about it all on here. Where we have this very large kind of correction happening here, right? The correction would be happening from way back here, around the end of 24. So all of 25 and then into kind of 26. And then you'd have your final move. And that would be pretty interesting. Okay. Yes, SOFR is also below 4. Yes, exactly. Bamboo Hope bringing in that extra information as well. So yeah, again, my big thing is we're not yet, at least, seeing any strong volume and large candle spreads coming in. Right? Now, again, we could see that. And even if we did, all it means is we're completing this part of this larger correction, right? And then you get this move down here. Everybody's freaking out. Everybody thinks, oh my God, we're dead. We're all dead. I'm glad I got out of here for something, right? And then it picks up and, you get a wick down below here on a weekly or something, and it rallies right back up quick and hard, back up to 90, 100,000. And then people start trying to convince themselves, oh, well, the 100,000 is going to hold because it's psychological, right? There's no way it's going to get up there above 100,000. And it breaks out above 100,000. And then they start making reasons why it has to continue lower because they didn't take any kind of profits, any partial profits. Their emotional state is definitely, it has to go down without really even looking at, and understanding structure, in terms of what I've been discussing, right? So that's definitely a possibility. And so that becomes my first thought if we were to see some heightened selling, if we were to see, more volume coming in, larger candle spreads coming in on the selling as we broke down further. That would be my initial thought. But other than that, I'm not. Again, I have a tough time with that lack of volume and large candle spreads coming out of what people claim is distribution at the moment. Because again, technically, that should have started here. If this is going to be your range, right? This is going to be your range, buying climax, automatic reaction here. You get your up thrust, after distribution. This is your breakdown below the ice, right? This becomes your last point of supply. At this point, this is the point that says, oh God, we're definitely going down. We're going down hard. And like I said, that could still show up here, but at least on the daily, for now anyway, it is looking like, well, shoot, let me pull this up over here. It is looking a bit more like this. But yeah, so many things would change. If we were to get that move down, let's say right here. Nope, let me see here. There we go. If we were to get this move down here, by the way, you'll notice low volume node, of course, high volume node here, 67, 64 or so would be your kind of high volume ledges there, potential target areas. But if this trades down, so many things have changed, right? So the idea of the 50 weekly EMA, if this was to play out, we get a 4 and then we get a 5, right? Your 50 weekly EMA would change there. But I don't know, if we sit here and look at it, the length of the cycle, the whole idea of the length of the cycle. But yeah, if this is going to be like a 1, 2, 3, 4, and 5, so wave 2 becomes sharp. I mean, what if this is just the wave 3 of this wave 2 here? And so this taking a few more months and getting down here, and this being in a correction basically since the beginning of the year means, hey, listen, we got a year-long bear market just going sideways, right? So then all of a sudden, maybe it ends up looking something like this. Let me turn this in here. Right? And, again, with the government just getting going now, everything doesn't start up all at once. It takes weeks to months to get all the agencies going. Full move again. So, liquidity might take a while to enter back in for the TGA. Right? And again, so you look here at this and you say, okay, well, the 1618 is right up here, right? It's all part of this expanded flat for what we got going on here. So, maybe for the next month or so, or maybe a few months, we get this move down, do a wave 4 here, and then we do a wave 5. Now, here's the thing. Doing the wave 5, we can just do a pattern target, which might get us like 150. Or, if we do what Bitcoin usually does, we end up getting, a blow off top type thing. And then you're potentially looking at what, 2, 3, 4, 500,000, depending, right? Especially if this becomes, that larger wave 3. But like I said, the big kind of sideways there that let me see, Reg was talking about, right? He was asking if is it too early to think about 10 to 20 years sideways. I don't know that it would be 10 to 20 years. I think maybe 5 to, on the deep side, maybe 10 years. But I think probably closer to maybe like a 4 or 5 year sideways, maybe. Which, again, is from the hop to down. And if you're doing a flat correction or a triangle, a flat correction, you're going to be back and forth from the, from the immediate swing low back up to that all-time high at that point, whatever it is, back down. You may see something like this, expanded flat playing out. Or again, you could just see consolidation during that time where price just makes higher lows and lower highs. If y'all thought you were impatient and going nuts here with just 6 months of sideways, imagine 4 years. But again, remember that that's the idea of that is a whole resetting. It's not a wave two where it's just a restart. So, I know a lot of Elliott wave technicians looking and go, okay, well, this might be the wave 5 of the whole thing. And even I was looking at it first, but the more you think about it, the more you look at, okay, what is really going on? What would drive that? Again, you start looking at, well, the next big correction, is going to be potentially, what we're looking there with like 5 years or something is some sort of sideways. Okay. And here, let me see here. Where's the, let me get a better chart here because this Coinbase one isn't going to do it for us. Let me see, which one is this? It's Bitstamp. Well, Bitstamp might do it. I think Bitstamp goes back far enough. So, basically, Bitstamp's here. So, again, you've got an overextended sideways here compared to, say, this one here, right? So if I'm looking at this, and depending on who you're talking to as far as this goes, and I don't really have a very strong opinion about what the wave count may be, but I think if you think in terms of what happened, right, in terms of development of Bitcoin, it seems most likely this would be a 1 and a 2. Okay. Or if you, some charts, this dips down lower here. And so that would be, basically 620 days or whatever, 630 days would be your, your correction there. But within here, even if we use this, right? If you, when you're doing waves, right, your interior wave should be shorter in duration and shorter in overall movement than your exterior waves, right? That makes sense, right? Because they're smaller waves. They're making up that bigger wave. So if we look at 413 here, and then we look at 364 here and 364 potentially here, right? This doesn't scream 1, 2, 3, 4, 5. So then we start looking here and going, well, what if this is 1, 2, and maybe this is 1, 2, and then maybe this is 1, 2, 3, 4. We'll get the 5, right? And so that would give us then 1, 2, and then 1, 2, 3, and then that sideways 4 that I was talking about, right? So since you're looking at, over a year and potentially closer to almost 2 years here, you'd be looking at 5, maybe longer, potentially up to 10 years in that sideways. But it would be a reset of the system. And what would we expect? Well, what we would expect then would be Bitcoin becomes part of the global financial system, right? It becomes that thing that underlies fiat currencies, right? You say, okay, what is it backed by? Well, it's backed by Bitcoin, right? Bitcoin becomes that pristine collateral. It's that move where you're moving Bitcoin from what we've been into a real place within the overall system. Does that make sense? Let me see what you guys are saying here. So yeah. Yeah, see, Fiboswani says, if support holds here, 2026 will be a continued stair-step bullish. We shall see. Yeah, exactly what we're talking about, right? Exactly what I'm saying. You see here. So yeah. Yeah, exactly. Backed by energy, right? Right. And so if obviously things have to happen and things have to go through, right? But if you look at the state of Bitcoin and global finance right now, right? And if you're not some silly person saying, oh, it's just a Ponzi, whatever, right? Just not even really thinking at all, just saying, oh, Ponzi, Ponzi, Ponzi. You've been saying it since 2011 or 2013, Mr. Schiff. But if you're really thinking about it, and you go, okay, but what if? What if Bitcoin isn't a Ponzi? What if it does have this value that is attracting buyers to it? And you look at it, you go, okay, well, how does that interplay with the overall system? And then you look at things, Trump saying, okay, well, we want to become, I want the US to become the Bitcoin mining capital of the world. I want to become the cryptocurrency capital of the world. You have all that, right? And yes, it's just talk at the moment. They've got some things they've pushed through and some things maybe they're working on, but, it still has to happen. But if you look and you go, okay, well, could it potentially do this? Well, I mean, the groundwork, right? The road is being laid for it to happen. And so a wave 4 is that transition period. You wouldn't see the dollar hyperinflate. You're not going to see that, I don't believe at all. But you will see it lose its dominance, right? And you're going to see maybe a competing basket of currencies, kind of operating as quasi reserve currencies, right? I don't think Bitcoin becomes a reserve currency. I think Bitcoin is what gives the fiat some value, some real value. But that all takes time, right? That takes all this change, everything we're doing, right? We got exchanges. Everything's getting is RWAs, right? Everything's becoming tokenized, including stocks, right? We've got the advent of 24-hour stock exchanges now. You've got the Texas exchange over there, what they're calling Y'all Street in the Houston area, or I'm sorry, the Fort Worth area, that I believe is supposed to open up within the next year potentially or something like that. That's going to be 24-hour trading. So you have a lot of changes happening in this financial system, whether it's local here in the US or outside the borders, the global financial system, that would make sense for it to be a wave 4 and not a wave 2. Now, here's the thing. I know if you're on crypto Twitter, if you're on just social media in general, you tend to see a lot of doom and gloom, right? That's what happens. Because people doom scroll, right? It's what happens. It's human nature. But the problem with that is you get stuck into this funnel, right? Into this echo chamber of where everything is, oh my God, the dollar's dying, the US is dying, all this other stuff's going to happen, blah, 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 right? But this is the same thing that's happened multiple times. Maybe you're not old enough to remember. Maybe you're not, haven't been paying attention to markets for, decades now to have noticed this. But people have been romanticizing the death of the dollar since the Bretton Woods Accord, since 1972. They've been romanticizing the end of the US just as long, right? Hasn't happened yet. But it is this cycle that does happen where you get this. And unless you've been through it multiple times, you don't notice. And especially with social media, you feel like, oh my God, everybody's talking about it. Everybody, this has got to be the way it is. Okay? So, again, when we look at not even just the charts suggest, as I was showing you there, that, hey, maybe there's a little something there, right? Maybe, let me get me up here again. Yeah, there we go. Maybe it becomes, a pullback on the way to higher rather than this crash, right? Because everybody thinks Bitcoin has to crash 80% or whatnot again. But, again, if you do say Elliott wave, that isn't the way it works. It doesn't crash every pullback, right? Wave 2 is usually the crash. Wave 4 is, again, the reset, right? It's a psychological thing. And so if we add that to what we're looking there, we haven't actually had that large wave 4 yet. And a large wave 4 would have a lot of people questioning, would have a lot of people, not sure what's going on, what's happening. And interest kind of dying off there. It just kind of does that sideways thing. Not just the wave 4 locally now, but again, that larger wave 4. Everybody would be expecting, if we were to push out further here, we go, okay, well, it's wave 5. We're going to crash down to $1,000. Well, again, if we look at the structure coming off the start, there's been no real, cycle sideways off that whole cycle. So that would be what I would expect. Okay. Bamboo says we are in a stable coin super cycle and nobody just holds stable coins because for the fun of it, they need to go into something. Why do you think the US was so hell bent on the stable coin bill? Yeah, exactly. Right. And by the way, I say everything becoming tokenized, payments and things are starting to get more and more with being able to do it with the stable coins. Right. I mean, everything is kind of moving in this direction. This is like the very beginning of it. But it takes time. It doesn't happen overnight. It doesn't happen in a year or 2 years, right? Hence, the beginning, everybody gets excited and starts getting into it, happening right now. We get the sideways where everything has to happen that has to happen to get it into that, what you were building here at this point, right? So if I'm looking at Bitcoin, and I am, that's what I'm looking at. None of it's hopium, none of it's permabull, whatever. Everything's just like, well, listen, here's what we're looking at locally. Now, again, that could change. You have to understand that. But if we're getting a weekly close above, 103 or so, I think there's a pretty good chance we head up from there. If we don't, okay, so maybe we get that move down there to that, that 70,000-ish kind of area, 70, 74, 68, somewhere right around there, right? Maybe even wicking a little bit further. And that just finishes off the capitulation of this sideways that we've maybe been in since January of this year. God, it's been almost a year, right? And, by that time, obviously, everybody will be out of their minds. They'll be completely just like, in disbelief and not sure what's going on and all that other stuff. And so, you just want to make sure that you understand. I guess my thing is, I don't just want y'all just running with the herd, right? The herd is right in the middle. They're never right at the beginning or the end. And the herd's pretty loud right now about, the top being in for the cycle and it's a bear market coming in for the next, year plus or whatever. And we're going down to 1,000 or 3,000 or whatever they're saying. That seems to be the consensus right now. But like I said, even if this was to be, let's say the top, let's say it was, right? The idea that maybe this is that larger wave 4, sideways before further upside makes a lot more sense in terms of market psychology and what's going on. Does that make sense? Yeah, again, so none of it's hopium, none of it's guaranteeing you anything, but it's all about how do we actually look at the structure of what's going on, and not just the structure, because structure can lie to you. It's that price action plus volume, right? How many times have you guys, I mean, like what we generally talk about, real quick here, let me put this back on. What we generally talk about when we're talking about structure is this idea of higher highs or lower lows, right? But how many times have you got a pullback along the way? And then it's just like for instance, right here, right? Right here. If we look at structure, we go, well, higher low, a higher high, higher low, higher high, higher low, higher high. Boom, we broke structure right there. That says, okay, well, the trend is done, right? And most people see that and they'll go, okay, well, now this big downtrend has to start. But what happens? Right back up and starts making new higher highs and higher lows, right? Structure can lie, but the price action and volume is what's going to help you, get a better understanding on it. It doesn't guarantee you're going to be right. It doesn't guarantee, anything other than when you're looking, at least you're getting a better understanding of what may be going on. Bamboo says, since the dump from 126, on-chain data has been showing that wallets with 10 to 100K have been accumulating. So everyone in panic and big wallets are buying. Yeah. Again, there's a lot of stuff going on there. that would have one, kind of leaning toward that idea that maybe this is just corrective and not actually the top. Dominique, I talked about Wyckoff distribution earlier. You're going to have to look back at the beginning of the show. But if you think it looks like Wyckoff distribution because some Yahoo online put up one of the schematics, one of the teaching schematics to teach phases and labels, not actually teach Wyckoff, price action and volume analysis, then ignore them. They got a 50-50 chance of being right, but the schematic itself does not actually tell you if something is accumulation or distribution, because accumulation will look a lot like distribution just in terms of straight price action. Andrew, you literally deleted your Excel on your phone. Man, I want you so bad. I keep getting shown so many times over the last few weeks, the people just putting up the schematics and going, look at Wyckoff, look at Wyckoff. And it's like, I can only tell so many people, right? Because here's the thing. Let's say it follows through similarly, right? They're going to go, oh, but look, I was right, but I was right. But were you, or were you just lucky? Again, based on Wyckoff and what they teach, what the Wyckoff method teaches, if you're using that schematic and it went generally the same direction, did the same thing kind of, well, you got lucky then if you're not using actual price action volume analysis, right? Does that make sense? Because absolutely what people don't understand, guys, listen, here's the thing. This is true everywhere else in life, not just with trading, but everywhere in life. There's what you know. Then there's what you know that you don't know, right? And then there's what you don't even know that you don't know. So I can sit here and go, okay, well, I know, if I've got a fever, I should do this, this, and that, right? I know that's what I know. I know that I don't know enough, right? Because I don't know. Could that be something worse? More than just a cold? Might it be pneumonia? Might it be something else much more severe? And then there's, I don't even know what I don't know, right? Some other weird disease that I've never heard of, or that comes out all of a sudden like COVID, something like that. But what I'm saying though is on charts is the same way, right? So if somebody pulls up a schematic and price action kind of looks like it, well, if you don't know Wyckoff, then, and you're watching that, you absolutely have to go to, okay, well, I know that I don't know anything about Wyckoff. And even though this looks like it, could there be a different story to it? Because I don't know about it, could this person be wrong? And these are the kind of questions, especially in trading, if you're new or if you don't know these different styles or methods of trading, that you have to ask yourself. Everybody says, oh, Elliott wave is subjective. Well, kind of. But as long as you're following the rules and the guidelines, you're going to know where you're wrong, period, end of sentence. You're going to absolutely know where you're wrong, even if your count is not correct. You're going to know where what you think the count is wrong. But to just say, oh, Elliott wave doesn't work because some Yahoo online got it wrong because they weren't doing the count correctly, or maybe somebody was doing it correctly and it still went because there's no guarantees, right? It could turn into a bigger correction, right? Or something like that. So, again, it's this whole thing. We don't give enough thought to the idea that we don't know what we don't know. And that's what traps us up. A lot of times in trading, a lot of times in life. Fibbleswani says, discipline isn't about chasing gains. It's about consolidating pain. That's right. If you're chasing gains, folks, all you're focused on is price for that one trade. The problem with that is you're going to define yourself by that one trade every time. If you make profit on it, you're going to think you're a god. If you lose money on it, you're going to think you're useless and you can't ever get anything right. But you're not your trades. You're a trader who does a thing. You trade. Trading something you do. So discipline is focusing on that system. Because if you focus on that system, then you're not focusing on what that, what the overall price is on that, right? It's listen, here's the system. Here's what I'm doing. Which means then you stop defining yourself by the individual trade. You stop trying to make some ridiculous amount overnight. You're trying to make 100x or 1000x. And instead you pull back and you say, okay, well, what makes more sense? What's more meaningful now in the way in which it looks versus I just want to hopefully get 1000x. Some Yahoo guru online told me that I should be making 1000x with this altcoin or something silly like that. Does that make sense? So yeah, absolutely. Discipline is what you guys should be focused on, and discipline in your system so that you're eliminating unnecessary losses. And when you do take losses, they're intelligent losses, right? They're proper risk management. They're not stupid losses. You're not losing 30 or 50% in a single trade. Because if you're doing that, you're never going to get where you want to go. You never will. So anyway, that's I just want to kind of really get my thoughts on Bitcoin out there, these updated thoughts based on what we're looking at. Again, for those who maybe just grab onto the things they want to hear, I am looking at structure and volume right now, right? That can change. That can change today. It can change this weekend. Okay. But if we're kind of holding this low area and moving back up and we're getting a weekly close above 103, that's the first step in the idea that that low may be in. But, again, it still has to do it. Okay. It still has to do it. And with what we're looking at here, it's at this point, it becomes everybody wants it to happen immediately, right? But again, if locally, if it is a diagonal, like I have drawn on there, then we should expect a sharp kind of reversal back up into the range, into the wedge. And then, more or less some sharp movement back through the top of the wedge. That's generally the way in which wedges resolve after they complete. So, if you're looking for something locally, what can I look at there? That's what I would be looking at. But if you can't get that close above 103 on the weekly, I would say you could potentially be looking down there toward those other targets I spoke about. And I would be leaning much more likely toward, that 70,000 area, which again, then just gives us that potential idea that we've just been creating a large expanded flat correction since January of this year. And like I said, if we do that, it'll throw everybody off. It'll throw the 4-year cycle guys off. It'll throw the 50 EMA weekly people off. It'll throw, just about everybody off. But, again, I think the bigger story here is this idea that our next real bear market, like something's going to be noticeable, more likely than not, would likely come with sideways rather than this big breakdown to a 3,000 or 1,000 or whatever. It'd be a large sideways kind of range, tens of thousands of dollars sideways, and would likely last, multiple years on that. Okay. But I mean, think about it. If we look at the idea that 2018 was the start of this 5 waves up rather than 2022, our current bull cycle, right, has been 2018 to 2025. It's been 7 years long. If we look at least at, what was that, 2019 was the, what's it called? BitMEX thing. What was it? Yeah, March of 20, COVID and all that. Then basically we've been in this bull market for about 5 years, right? And we would potentially have another few years to finish it out, which would be different than what everybody expects from the chart so far. All the 1 year up, 1 year pullback kind of thing. So, again, no guarantees on what's going to happen here. But at least as far as it's developing so far, that's what I think's happening. And we'll have to take a look at it there, if something different happens, right? All right. Well, anyway, hopefully I gave you something to think about, something to look at anyway. I think I'll probably end up posting a chart there on X at some point here, sooner rather than later. And we'll check that out there. But anyway, there you go. That'll do it, guys. I'm going to get out of here. Like I said, Fibble will be back with me next week. He promises. So we'll do that. And then probably be back much more frequently since his project stuff he was doing at work is finally completed now. So you guys can look to seeing him hopefully every other week for a while here. All right. As always, remember, the only thing you control is how much you lose. So please keep working on that risk management. I hope you all are having a great day. Trading safe out there. And, again, guys, focus more on your risk management. Focus more on, your system than, the individual trade itself. You'll have a lot better results over time for sure doing that. All right. Take care, everybody.
Trading tip: always manage risk before chasing gains.